First of all, thank you very much for having me on this morning. No, I think the ADP figures were very impactful on the market, and I would expect today's non-farm payrolls to have the same kind of impact, although a lot of it's baked in with that negative 1% on the S&P 500. But look, I think there is a lag effect, as you pointed out, Jeff, to raising interest rates and its impact on the labor market. And I think that's what you're seeing. And I think what you're seeing in Esther George's comments yesterday was really some little bit of jawboning, because I think what they want to do is raise the rates to that 5%, 25 basis points the next two meetings, and then hold it there through 2024. The market has been really resistant to accepting that reality. But that's when I was on last month. It was the same story. The market doesn't really want to accept that, but I think the market is starting to accept that, and you're seeing that in how the market has reacted to yesterday's ADP numbers. One thing I wanted to just mention, because I think it's important in the ADP numbers, is that the number of quitters versus people laid off was a pretty high ratio. So a lot more quitters than people who were laid off. And when quitters take a new job, I mean, that suggests that quitters believe they can get a new job quite easily. And the ADP data is showing that when they do, they get a 15% wage hike. So there is a lot of still pressure in the labor market that's quite different from the payroll numbers, which have come down a lot. I mean, remember 2 years ago it was 600,000 jobs created. Now we're down to 200,000 per month.
Yeah, I think that underlying confidence is remarkable at the moment, given that the messaging, largely from the Fed, still seems to be we are set on lifting rates further at this point. The one fly in the ointment for me this morning is as we talk about Jim Bullard, who's starting to talk about disinflation for 2023. Now, how do we put that into the mix when you've got Esther George, who sounds like she is not interested at all at this point in taking the foot off the pedal on higher rates?
Well, there's always a discordant kind of battle between raising rates to slow the economy down and then worrying about falling into a recession. And they're trying to land the plane in a soft way. Now, that's very, very difficult. History has told us that. We've had rates in 2022 go up like a rocket. And I suspect they'll come down like a feather, meaning not until 2024, as Esther George mentioned. And look, remember, 2024 in America is an election year, and as much as the Fed should be immune to political kind of pressures, if unemployment gets to where economists think it needs to get to have the economy be disinflationary, it needs to get closer to that 5.5%. It's still only 3.7%, as you noted at the outset. That's the unemployment rate. We don't expect that to creep up, in the near term, but that's where it might be. And that's where I have a lot of respect for, Leon Cooperman, and he's giving you the other end of the spectrum, which there is data that would suggest that we are heading into a recession. You have the classic canary in the coal mine, the inverted yield curve. Doesn't mean you're going to have a recession, but every time you do have one, you have an inverted yield curve between the 2 and 10-year.
Neal, can we talk about the sacrifices in the jobs market? We've had a whole bunch of reports crossing this week. Amazon, Salesforce, this time round in a downturn, if it's coming, and in terms of a labor market that won't be so tight in future, where do you think those big sacrifices will come from?
I think in the tech area. And I think you said you looked Salesforce, 10% of their workforce. Amazon, 18,000 jobs. It's a lot of jobs. But what you looked at the ADP data yesterday, luxury, folks in the service economy, those jobs are being created, and that's a lot still a bounce back from kind of the COVID period. So that's the discordant kind of picture in labor. But I think where you're going to see layoffs are going to be in these big, the big tech companies that really overhired in response to the kind of COVID world that we were living in.